Hi everyone, my name is Casey Norton and the company I chose is TJX Companies Inc. So just a little background on TJX. They are the leading off-price apparel and home fashions retailer, not only in the US but worldwide. They have 7 retail chains, which include 3 e-commerce sites. They also have thousands of stores that span across 9 countries and even on 3 continents, so it's a pretty huge operation. Their mission is to deliver great value to customers every day by offering quality designer merchandise that's 20 to 60% below full price retailers. Their demographic includes middle upper class neighborhoods. It's mostly people looking for designer items at a smaller price tag. So just a little background, a timeline for TJX. So the company is a little over 40 years old. It was founded in 1977. Since then, the company has grown exponentially. They've expanded into Canada, into parts of Europe, as well as Australia. They've also built out their e-commerce business. A huge milestone for the company is in 2013. They launched their first e-commerce site. It was for TJ Maxx. Since then, they've launched an e-commerce site for Marshalls and for Sierra Trading Post. So moving into the market share, as you can see, it's a chart divided by brand and by price. So TJX is in the bottom right-hand quadrant. It's close to designer brands at lower prices. And if you look right above them, you see Macy's and Dillard's, which are also TJX competitors. They offer designer brands as well, but they offer them at higher prices. And then if you take a look on the left-hand side, you'll see non-designer brands and how they vary by price. So let's take a look at the current industry trends. The department store industry is currently moving away from traditional brick and mortar sales, so in-store shopping, and moving more towards online retail. So a quick little statistic, in the 2019 holiday season, the department store industry saw brick and mortar sales grew by 1.4%, while e-commerce sales grew by over 6 times that to 8.1%. So even though the industry is moving away from brick and mortar sales, TJX is still showing growth. Their shoppers still want that in-person interaction, so traffic at TJX is still high because these shoppers want the treasure hunt experience. This refers to you don't necessarily need an item, but they want to search for a great deal. They want to search for something they don't necessarily need, so it's a treasure hunt. Now moving to the external environment. So the Pastel analysis describes the driving forces of change in the industry. So one portion of this is the political force. So TJX may face price regulations and trade tariffs just from conducting business overseas. Then moving to economic, stores will perform well if the economy is doing well. That's because consumers have additional disposable income that they can spend on shopping. The next is social. So that's demographics and the skill level of the population where the stores are located. So TJX stores would not perform well in low income areas as it just doesn't fit their demographic. Next is technological. In the department store industry, companies are offering e-commerce sites that make it easy to order products that are found in stores right online. The next is legal, so it's customer protection in e-commerce. So in this industry, stores have personal information that they need to protect against fraud. This information includes credit card numbers, phone numbers, addresses, things of that nature. Next is environmental, which includes weather, climate change, reducing the company's carbon footprint, just to help out the environment, reduce their impact on the environment. Moving to 5 forces. So rivalry among existing competitors is the first force. TJX operates in an extremely competitive department store industry. So as you can see on the left-hand side, you can see their major competitors. They include Target, Macy's, Kohl's, Nordstrom Rack, and also Ross. So we can even narrow down this industry even further. So TJX is actually in the off-price department store industry. which means that they offer designer clothing at lower prices than traditional department stores. And their direct competitors in this space are Nordstrom Rack and Ross. So as far as competition goes, the competition could eat away at the company's long-term profits. So the rivalry among existing competitors is extremely high. Next is threat of new entrants. New entrants include Poshmark and The RealReal. These are apps that sell designer products that range from low prices to extremely high prices. However, these entrants do not operate on the same size or scale of TJX. They may sell one item here or there. They don't have the same producing capabilities as TJX. So as a result, threat of new entrants is quite low. Next is bargaining power of suppliers. TJX uses many suppliers all around the world. They actually have 21,000 vendors in 100 countries. So TJX could easily switch suppliers, which means suppliers have less control over prices. So as a result, bargaining power of suppliers is a weak force. Next is a threat of substitute products or services. TJX has a few substitutes. These include Macy's, Dillard's, and any other traditional department store. This is because department stores such as Macy's and Dillard's offer the same high quality product, but they just sell them at a higher price. These substitutes wouldn't fit into TJX's demographic because their demographic is looking for deals on the designer items and they wouldn't pay full price. As a result, this force is low. Lastly is bargaining power of buyers. Buyers in this industry are demanding and they want the best offer for the lowest price tag. However, options are limited in this space. Buyers are limited to the number of firms that can offer the same designer prices at these same low prices as TJX, so they don't have much control over prices, and as a result, this force is low. Moving to the internal environment, I wanted to touch on the company's strengths, weaknesses, threats, and opportunities that the firm faces. So the strengths are that they operate thousands of stores around the world. One weakness is that the stores are heavily concentrated in the US market. One threat is against fraud against consumers' personal information. And opportunities include increasing their international market share, so expanding into additional global markets, and then expanding their e-commerce businesses. Next, moving into the Eliminate, Reduce, Raise, Create grid, which discusses TJX's strategy. It describes their competitive strategy options. So one option could be to eliminate salespeople on the floor of the stores. This is because TJX shoppers don't necessarily need salespeople. They're more on the hunt for that best deal. They don't necessarily need these salespeople. Next is to reduce the company's impact on the environment. So this would mean to reduce their carbon footprint. Next would be to raise the company's online presence, to build out an extensive catalog to include more products on their sites. Next would be to create sections like the runway that's found at TJ Maxx and incorporate that into other stores. So the runway is essentially a high-end section that includes pricier, more designer items that's traditionally found in TJX stores. So it would just target a new market, a higher end market. Next, moving to the balanced scorecard. So this describes how the company can sustain their competitive advantage. It's broken up into 4 separate components. So one is financial, which describes that the stores just want to be profitable at the end of the day. They want to increase their stock price for investors and stakeholders. One idea here is they could buy more inventory during holiday season to increase profit margins. They can increase their sales during that time of the year too, knowing that more people are out shopping at that time of the year. Next is customer. This is all about customer satisfaction and customer retention. This means keeping the stores fully stocked with the most desirable products that consumers will buy. Next is internal business, which is just maintaining strong relationships with suppliers, It's also social responsibility, so being more environmentally friendly, reducing your carbon footprint. Next is learning and growth. Growth consists of expanding and opening new TJX stores. And growth refers to growing the human capital aspect, so continuing to train and grow TJX's employees. Moving to the financial analysis. So as you can see here, net income for TJX and all of its departments have steadily increased over the last 5 years. And then I broke it out by department. So you can see Marmaxx, Home Goods, TJX Canada, and then TJX International. TJX has the highest net sales of each department because it's made up of the most retailers. So it has TJ Maxx, Marshalls, Sierra Trading Post, and then all 3 of the e-commerce stores. And then next I wanted to do a competitive comparison. So it shows TJX compared to its 4 competitors. So you can see from 2017 to 2019 that TJX competitors, their net income has consistently declined. And I think this is because the industry is moving away from in-store shopping. So these stores are in malls, they're seeing less foot traffic, so their net income is slowly declining. Whereas TJX, on the other hand, they're seeing increasing rates of foot traffic. Shoppers still want to go into the store for that treasure hunt experience, so we're seeing their net income climb. Moving to core competency for brand equity, TJX is known for offering brand name designer products. They offer that treasure hunt experience where shoppers search endlessly through racks until they find their perfect item. This type of shopping trains shoppers to understand that these finds, the things that they're finding, can quickly disappear, and that they should make the purchase now or risk losing the item because it may not be there when they come back. Supplier relationships. TJX has extremely strong relationships with their suppliers. This allows them to offer low prices to their customers. Suppliers provide them with buying opportunities, which include order cancellations from department stores, or if a vendor needed to clear out their merchandise at the end of the season. That's how TJX is getting their merchandise. Next is development of talent. TJX fosters the growth of their people. They provide an 8-week intensive training program that trains employees before they're thrown into their position. So this fosters growth and development, just to give their employees time to adjust and to learn the ins and outs of their position before they're thrown into it. This really sets them up for success. So can TJX survive and thrive in an environment that is moving away from traditional brick and mortar shopping? Should TJX build out and enhance their current e-commerce site to keep pace with an industry that is moving toward online retail? So this would mean allocating additional funds to the company's e-commerce businesses. So I believe TJX should continue to expand their footprint and continue to open new stores worldwide. This is because the company continues to drive foot traffic through their rapidly changing merchandise that changes daily and the appeal to their customers of the treasure hunt shopping experience. Additionally, TJX should continue to build out their e-commerce site to keep pace with the trends in the industry. The industry is moving towards e-commerce businesses, and TJX should do the same. They should invest additional resources into creating an extensive catalog on their website to just include more merchandise on their sites. So in conclusion, TJX should expand their physical and digital footprint. They are flourishing in this space, even as the rest of the industry is pulling away from in-store shopping. TJX is surviving through this time, and there's no stopping this off-price retailer. Thank you.